So if you trade ICT concepts, right? I already know everybody loves to go to just ICT's page, right? Where he does a lot of explaining, right? But if you go right here to ICT Gems, this uh page right here gives you a lot of insight, deep information about, like right here, how to select quality FVGs and order blocks, the correct way of trading fair value gaps. You know what I'm saying? Like it has execution orders. It has so many, the macros, institution order flow. It has so many, the first presented fair value gap, right? So you go on here, you watch, okay, and it gives you the exact information and order that ICT used to, you feel me, for the execution to get in on the first presented fair value gap, and they got stuff like breakaways. So what I do, I come back on my chart, right? I come on my chart and I literally try to mimic the exact same thing, right? So some quick insight to show you what it is. What is a actual order block? So this is a order block, right? So why we have, so first of all, what we have right here, we have its, so we know that we're bullish. We're bullish because why? We are keep going up, creating higher highs and higher highs, right? This is a 1 minute chart. So if I go to a 5 minute chart, it's gonna, the counter is gonna be a little bit, it's gonna be a little bit less candlesticks, but same price action basically, right? So we have the high, which is buy side, right? Buy side liquidity. Remember, the top is liquidity, right? Swing highs are liquidity, swing lows are liquidity, right? A fair value gap is basically where you see it's a 3 candlestick pattern, right? Where the first candlestick and the third candlestick do not touch and it leaves a gap. See how it left a gap, right? This is the middle candle. The second one is the displacement candle, right? So you see how the first wick and the third wick do not touch and it leaves a gap, right? And then once it comes back to the gap, you're expecting, when it comes back to the gap, you're expecting to stop and bounce, right? Bounce at the fair value gap because it's a bullish fair value gap, right? Buy side imbalance, sell side inefficiency, which means it's inefficient to the sell side. It's only delivering buy side, right? It comes to the zone, bounce, and it just runs away, just like that. That's what you're expecting in a fair value gap, to create a new high. Remember, these all are highs right here. This is a high, this is a high, this is a high, which means is these are liquidities, right? The market loves to hunt liquidity. The market loves to do 4 things. Create the liquidity. You see, it's as it's coming up, it's creating it. Come back down, it's creating it. Come back down, it's creating it. Like it's generating it, right? It comes down to fake people out, thinking it's gonna go lower, right? And then it stops here at this order block, at this imbalance, and it stops here at this buy side. So let me show you another order block right here. So we have, this is the order, so this is the actual order block. This is the order block. You have 2 down close candles, aggressive move, displacement up, right? So this is the order block. From here, I don't know why he's doing that right now. From here to here, right? Where's the fair value gap? Right here. And look what happened. So yes, this fair value gap got disrespected, but look what happened right after that. Fair value gaps can get disrespected, then come back and get reclaimed, right? Because it's something that's called an inverse fair value gap and then a regular fair value gap, right? It broke through the next candle. If it was really bearish, which means if it really wanted to go lower, it would use it as an inverse. So it'll break through, come down, reject the equilibrium of the fair value gap and to go lower. But what happened? It just dropped here, came back up into the range, closed above 50, right at equilibrium, wicked way up here. So this was a bullish, a big bullish candle at one point. Came back, reclaimed it, came here, didn't even have the willingness to come back into the fair value gap because it stopped literally a point above and then just ran back to the upside. And then you see how this zone was basically used again. It didn't even come back down here, showing it didn't even have the willingness to come back down to this fair value gap of this order block, because we all know a order block. So we know one order block on top of another order block, that's called a propulsion block, which is the accelerator. That's why it accelerated price way up here. Now this is the new order block. You put your stop loss below this low, and then once it comes back into the zone, you see it stopped right underneath the 78.60. It couldn't even get to equilibrium, to mean threshold of the propulsion. And then what happened again? Ran away, creating another order block. You see what I'm saying? And then the same thing. Fair value gap, bounce, and then eventually takes the sell side. Then it comes back down, uses fair value gap. But we know the more times price comes back into zones, it gets weaker. So look, the first time it comes to this zone, it's strong, bounces away. Come back again, it's still strong, bounces away. This time it came to it, it didn't even have the willingness to come all the way down. Right? Stopped here, displaced higher. And then, so that's 3. And then comes back again. So by this time, if you see this didn't take the high, now you know we're weak. Especially if it don't come to equilibrium from this high to this low. Especially if you see it stop right here, like right around here. Right? It stops right around here. And start coming back down, maybe here and come back lower. Then eventually we're gonna eventually use this same order block, same fair value gap, as a inverse fair value gap. Right? We're gonna use the same zone as a inverse fair value gap. Come back to come here to go back lower. Right? So back to the page I was saying. So this page, it's so many different. It's called Ict Gems. It's so many different information. Remember, information is key. It's all about information and then going back and applying the information, because it's more than just learning it. You have to do it. Then you gotta get good at doing it. You know what I'm saying? And you gotta learn back and forth, journal, write your notes, figure out what you do good, what you do bad, because Ict, he said he got like about 87, 80, whatever PD arrays, which are strategies, things that you can use for entries, right? And they all are inverses, so it's literally ×2, right? So this page right here, after you go on after you go on his page, learn what you gotta learn. When you want to come on this page to get some deep information to really understand, because there's no talking, it's just straight executions. So if you can really read price,
so you see,
see some of them they talk.
Took a form of buy side over here.
And this quick video, this video is only a minute and 50 seconds.
I was watching to see if they would be overzealous and want to take it up into the premium wick. Consequent encroachment, you watch that actually be marked out.
So premium wick, do you guys know what a premium wick is of consequent encroachment? You know what I'm saying? Like, it's stuff like that. It's stuff like that, right? The premium wick. A premium wick is basically, this is a premium wick. This is a premium wick. Because it's in the, you know what I'm saying? I ain't gonna go too much information because I don't want to see something I don't really know. Right? Like, I know it, but I know it to a certain extent. Right? Because I'm in the level of learning how to trade and becoming a trader, because it's all about becoming the person that can do the thing that could eventually cash out. Like all the people we see. You know what I'm saying? So you have to utilize your advantages, which is YouTube. You don't have to pay no money at all. Right? Get some information. Figure it out. If you don't know, come on my page. Text me, my Instagram page is Casino Trades. Please don't get scammed. I only follow 5 people. So please don't get scammed. DM me, I'm trying to learn, man. I need some help with ICT, stuff like that. And I'll be glad to just come on and help you, because difference is like turtle soups. It's 2 types of turtle soups. I don't even know if you knew that. A lot of people probably think it's just one type of way of turtle soup. There's 2. I guess there's 2. I ain't even know that. See what I'm saying? So it's so much things. So let me just show you what an order block, because I have a quick order block right here. So this is what I like to see actually. So we're literally bouncing off an area. We're kind of expecting it to reject from. And look what happened. There's relative lows. So you see all these lows right here. These are relative. These are relative right here. Relative, which means it's all in the same zone and it's still not swept. None of these zones been swept yet. So now we got triple lows. So remember, price loves to make things jaggy, and if it's smooth like this, you see how smooth this is. You see how smooth these lows are. You see that? It was double lows, but look what happened. It came down, stopped right here, didn't even sweep it. So it actually created triple lows. That's what it actually created, triple lows. Delete the zone, and I already have all my PDRAs like levels, so I just could draw this zone right here. I got my triple lows, and I could just notate it like this right here. I already got them all saved. Triple relative lows right here. Got my relative lows on. So, but anyway, this is a fair value gap right here. I mean, the order block right here before I get off. So these are a good order block. So this is a fair value gap right here, right? This is a fair value gap. So remember, we're in a zone, we're in an area where we're expecting it to bounce from. So we got a good displacement, right? We got a bounce, displaced up higher. We took this little swing high right here. So look at the order block it just created. We have 3 down close candles. Yo, why is it? I gotta fix that. That was crazy. So we got 3 down close candles, and we have an aggressive close above. You see? 1, 2, 3, and then we have 3 above. And you see how aggressive it is? But you see, did it create a fair value gap? No, right? So you just want to be patient, right? But there are other ways, right, that you can actually take the play without the fair value gap, right? So now, what am I expecting? I'm expecting it close here, so I'm expecting to come back into this zone, come back into these three bearish candles right here, right? And we know on the order block, the top candle from the open is the most sensitive part. So I'm not even, if I'm bullish, and you see how it left a low wick. So this is called, this is called a discount wick. Remember before I showed you what a premium wick was? This is called a discount wick because it's at the bottom, right? So this is what I'm expecting. You got the bearish order block, 3 down close candle, aggressive close above, no fair value gap, right? Either you can wait on a fair value gap or you can actually read price and see what it's doing. So I'm expecting to come up here, come back into the zone, stop at the most sensitive part of the order block, and to not take this rejection block right here. To stop probably at mean threshold, probably like right here. Then come up, displacement up, create another order block, which is the propulsion block, to accelerate the move higher. But you have to be mindful because remember, we just swept liquidity. We just swept liquidity, so now it may be time. And then look at the aggressive move down. Look at the aggressive move down. So we may probably like stop at equilibrium from this zone and go back lower. That's what I'm probably expecting. But anyways, ICT right here is called the Ict Gems. You can come on this page a lot and get a lot of information, right? Of course, you can go to the actual ICT's page. Him right here is called the Inner Circle Trader right here. So much information. Another trader's information where you can go to is, his name is Tremaine. Tremaine Trades. This is my actual mentor right now. I'm in his Discord right now. This man golden right here, the most disciplined trader out here. And you see up here, ICT did stamp him, saying that he does know what he's talking about. But anyways, man, appreciate y'all for tuning in. Remember, become the person that do the thing to eventually have Mr. or Mrs. Profitability. Become the person that can do it, right? These people could cash out so much. It's all about, and remember, anybody could win trades, right? But can anybody consistently take money out of the market? That's the hard part. So you're not going to consistently do that until you're consistently the person who can do that. Let's get it, man.